Okay, so this is one of my favorite chapters in mathematical reasoning because it talks about how important it is to manage your money, and we all have money concerns, um, and that is one of the most largest ways, I guess, the biggest way that math is kind of relevant in our lives. So let's talk about this. So Unit 4A is discussing taking control of your finances. When you're trying to control your finances, you need to know your bank account balance and avoid bouncing a check or having a debit card rejected. You need to know what you spend. In particular, keep track of your debit and credit card spending. You don't want to buy anything on impulse. Think first. Buy only if the purchase makes sense. Make a budget and don't overspend it. So here's an example. Cassidy has recently begun keeping her spending under better control, but she still can't fully pay off her credit card. She maintains an average monthly balance of about $1,100, and her card charges a 24% annual interest rate, which it bills at a rate of 2% per month. How much is she spending on credit card interest? Well, her average monthly interest is 2% of the $1,100 average balance, so she's spending $22, which is what you would get if you took 0.02 times, which is 2%, times 1,100. You would get $22. Multiply the 12 months in a year gives her an annual interest payment of 12 times 22, which is $264, which she has basically just given away. The interest alone is costing Cassidy more than $260 per year, a significant amount for someone living on a tight budget. Clearly, she'd be a lot better off if she could find a way to pay off that credit card debt balance quickly and end those interest payments. So you want to follow this four-step budget making process. First, you want to determine your average monthly income. Be sure to include an average monthly amount for any income you do not receive monthly, such as a once-a-year payments you only get once a year. Number two, determine your average monthly expenses. Be sure to include an average amount for expenses that don't recur monthly, such as expenses for tuition or books, vacations, insurance, and holiday gifts. Number three, determine your net monthly cash flow by subtracting your total expenses from your income. Then you want to make the adjustments as needed. So, in addition to your monthly expenses, you have the following college expenses that you pay twice a year: $3,500 for tuition each semester. You also pay $750 in student fees each semester and $800 for textbooks each semester. How should you handle these expenses in computing your monthly budget? Well, the amount paid over a whole year would be, since you're paying these twice a year, 2 times 3,500 plus 750 plus 800. And be careful when you're doing order of operations. You want to find the total in the parentheses first, and then you want to multiply that by 2. So this would be the amount for the whole year. So once you have the amount for the whole year, to average this total expense for the year on a monthly basis, we'd want to divide that by 12. So 10,100 divided by 12 is going to be approximately $842. Your average monthly college expense for tuition, fees, and textbooks comes to a little less than $850. So you should put $850 per month into your expense list. Across all institutions, the average cost of a 3-credit college class is approximately $1,500. Suppose that between class time, your commute time, and study time, the average class requires about 10 hours per week of your time. Assuming that you could have had a job paying $10 per hour, what is the net cost of the class compared to working? Is it a worthwhile expense? So if you look at a typical college semester that lasts 14 weeks, your lost work wages for the time you spend on the class comes to 14 weeks, 10 hours a week that you're losing in commute time and other things, plus a $10 an hour that you could be working. That is supposed to be HR. Well, that would give you $1,400 over the semester. So we find your total net cost of taking the classes by adding this to the $1,500 that the class itself cost. The result is $2,900. Whether this expense is worthwhile is subjective, but remember, college graduates earn nearly $1 million more than over a career than a high school graduate. Insurance costs. The premium is the amount you pay to purchase the policy. Premiums are often paid once or twice a year, though sometimes you may pay them more often. A deductible is the amount you are personally responsible for before the insurance company will pay anything. A copayment usually applies to a health insurance as the amount you pay each time you use a particular service that is covered by the insurance policy. So here's an example. Suppose you have an accident and end up in the emergency room. You're receiving a $7,000 bill for your treatment. Fortunately, you have health insurance, but your policy has a $1,000 annual deductible and a $250 co-payment for the emergency room visits. And it pays only 80% of the remaining balance. How much will you pay out of pocket for the emergency room visit? Assume that you haven't had any other medical expenses in this current year. Your total payment has three parts. First, you've got the $1,000 deductible, which you will pay in full since you have not already paid any of it earlier in the year. The $250 copayment for the emergency room visit, and then your share of the remaining balance. Well, the total bill was $7,000, but you've already paid $1,250, $1,000 deductible plus the $250 copayment. Therefore, the remaining balance is $7,000 minus $1,250, which comes to $5,750. The insurance company pays 80% of this, so you owe the other 20%, which is 20% is 0.2 as a decimal times 5,750, which is $1,150. So your total out-of-pocket cost is still quite a bit: $1,000 for your deductible, $250 for your copayment, and $1,150 for your share of the 80%, well, the 20% of the bill that's left over. So that's $2,400. Base financial goals on solid understanding. You want to find a way to make your budget allow for savings. Understand how savings work and how to choose appropriate savings plans. You want to understand the basic mathematics of loans and understand how taxes are computed and how they can affect your financial decisions. Understand how the federal budget affects future personal finances. All of these things are going to be some things that we're going to talk about in Chapter 4, and hopefully you'll be able to wrap your mind around making some great financial decisions.